share with our friends a monthly newsletter of, you know, what's been happening with the market since COVID, especially since it started, and, you know, what we're seeing and experiencing on the field. But we wanted to bring you on here because you're a lot closer to, you know, the financial piece, so the interest rates, the loans, what the banks are thinking right now, and, you know, how you're helping clients through this whole period of COVID and such. So one of the questions that we continue to receive from people that are interested in becoming homeowners is, hey, you know, rates are very low, but I'm not really sure what's happening, you know, given the unemployment rate, given the forbearance, given the pandemic. Is this a good time to buy, even, you know, with rates being so low? So what are your thoughts? What can you share with us?
Yeah, a lot of information out there, a lot of disinformation probably too. COVID has definitely changed the landscape in many ways. The rates have come down significantly into the twos, which we haven't seen stay for purchase loans, and we haven't seen that ever that I know. That just read an article and it was saying that rates have been in 2% in July, which has never happened for purchase loans. So very interesting. There's that. I understand the fear and trepidation. There's a lot of uncertainty, but you guys can attest more to, you know, the home prices and things going on, you know, values rising rapidly because there's no inventory. In that same article, I think I saw that home prices increased 5.5% year over year from July to July. Mm-hmm. And so that's through the thick of COVID. So much so that, you know, we bought a house. So I guess we were scared a little bit, but but not that scared. So.
Yeah. There you go. If the mortgage lender bought a house.
Yeah. So how about this question? You said the rates are in the twos. For those who are coming at this cold turkey, it doesn't really mean much, right? So compare that to last year, the year before. Give them some relative speak on what that means.
Okay. So affordability. It's all about affordability. The lower the rate, obviously, the lower the payment. Where do we see rates last year, July? Top of my head, I'm going to guess high threes, touching 4%, because we've had a lot of refinances this year with rates going down. And in 2018, Rob and I remember we were touching rates at near 5%. So
over 5. I remember 5.5 that year.
They did touch it. So I mean, it's all about affordability. And so I know I get into lender speak and talk in a different language, but to have an interest rate at 2.75% has never happened with people before. So yes, the purchase prices are high, but if you look at your payment, you know, compared to maybe a lower purchase price and a higher interest rate, it's actually more affordable to buy a home now in this time.
Yeah, thank you for sharing that. I think we keep, you know, put it into perspective. We keep sharing with people, the rates are so low. But again, the power of these rates being so low, and us wanting people to understand how much they'd be saving by taking advantage of such rates. So a lot of people also ask about, hey, you know, what about forbearance? Like, am I going to be able to get a better deal if I wait, just because of all the people that are potentially applying for forbearance right now? So can you tell us a little bit more about the share of mortgage loans that are currently in forbearance? Is that kind of continuing to go up, or is that continuing to go down?
Yeah, so first of all, forbearance is just, for those of us that may not understand the definition, it's just a promise to repay later. So what people are doing, you know, the CARES Act, the government said, hey, you cannot pay your mortgage payment for 6 months, maybe 12 months, but in the CARES Act, it's written at least 6. And it's just a promise to repay later. So if people have lost their job, if they're just choosing not to make their mortgage payment because you don't really need a reason to take forbearance right now, then these people still owe the money after 6 months to a year. And as long as they come current, they'll retain their home, right? Quick stat on that I saw, I think it was 6-point-something% of mortgages are in forbearance, the majority of them being VA and FHA type loans, and then conventional. A quarter of those, 25% of those, that's 6%, are choosing to be in forbearance even though they're still making their payment. It's like an insurance policy. So we hear these numbers of people that are in forbearance. You got to throw out 25% on that number just because they're still making their payment, but they're technically in forbearance in case stuff happens. So they're kind of like in the program in case, just because they don't feel safe. Mm-hmm. But anyway, so the timeline, you have forbearance. If they come back in 6 months to a year and they pay their mortgage, great. They just go on living life normally and they have the same terms. Mm-hmm. Or if they still have trouble, they go into loan modification. Loan modification process, we saw it in 2008 to 2010. It's, basically you miss a payment or two, you negotiate with the bank and say, hey, I can afford this, my mortgage is here, can you help me out? That process will play out. Then you'll see the foreclosure process. But there's so much data out there that shows that most people have equity in their homes, at least 50% across the nation, like there's 50% of equity.
Wow, yeah.
So do we think foreclosures are going to be this avalanche like in 2008? Personally, I'm just one guy, but I don't think that's going to be the case. I think if you're sitting on equity and you have 200,000 basically in the bank or your house that you can sell, you're having trouble, you'll probably sell it. If you foreclose, you lose that. So people will probably sell their homes. But once again, that's a good 6 months, a year down the road, because we've been going through this for about, 6 months now.
That's a really interesting stat, the 6% in forbearance. I didn't know that. So with that in mind, I know you don't have a crystal ball, but I know you monitor a lot of the different markets that impact interest rates. It being so low so long, I think it's a shock to most people in the industry, myself included. I can't speak for Laura, but I would think so too. Where do you see rates going? We're coming to the end of the year. I mean, it's tough because it's an election year. Like, there's so many variables, right? But obviously, I'm not asking you for fact, but just your honest opinion from being a little bit more versed than us. What do you think the next 3 to 6 months are going to do rate-wise?
So I have absolutely no idea. But I listen to the experts and I follow them, I read them, and you talk about the FHFA chairman, Mark Calabria with the government, right? Federal Housing Finance Authority. You listen to the Fannie Mae and Freddie Mac CEO, chairman, chairwomen, and then you have bank CEOs, and they all forecast rates into 2021 staying in the twos. So that affordability is going to be there. We're going to still have, hey, sorry, I have the kids now. So the affordability will be there, right? Oh, they can't help it. So the affordability will be there. The rates will still be low as long as the economy still needs help. There's so many other factors that go into it, but that's the forecast. You bring up a good point with the election. It could completely change how the housing market or the interest rate market is, because a lot of the reason why rates are low is because institutions don't trust their money in the stock market. So they don't trust stock market, they put it in bonds, which lowers interest rates. So, just Republican, Democrat, you see Republican presidents, the stock markets usually love them. Democrats, they don't love them as much. But under Bill Clinton, they're what they did. But anyways, if Biden wins, you might see that flow of money into bonds, and it might actually make rates lower. If Trump wins, it might take their money out of bonds and get back in the stock market. So there are a lot of factors. We always go back to it, we do our seminars and things, our events, that why are you buying a home? Does it make sense? Is it right for you? Can you afford it? If you trust those factors, I think the rest is secondary.
That's fair.
All right. I guess anything else? As far as I think I've read some things, people kind of being afraid of the unemployment rate. During COVID, the highest was about almost 15%. Now we're about 8%. So obviously there's been a lot of great improvement. But just from the people that are submitting applications with you and with your team, are you seeing a lot of people, a lot of the people that are applying for mortgages, are these the people that are losing their jobs, or what are you seeing there?
No, and I wish they would break stats down. I'm sure they're out there, but into more of a micro, a search or, data to, like, what is San Diego right now with unemployment?
Mm-hmm.
Is it the national average? Is it higher? Is it lower? I would guess it's lower, personally. California and our economy and everything else going on in San Diego, I think that would be the case. But that's one thing, right? So other than that, the people who I'm working with, they're excited to buy homes. They have stable jobs. They trust in the economy. They trust in their jobs. They're excited to buy homes, really. I haven't had, besides, one issue, I haven't had anyone lose their job during escrow or during the pre-qualification. And this is going back to February, March. So, it's been very stable.
Yeah,
that's awesome.
It is a really interesting conversation that you can almost talk about for hours, about seeing the unemployment rate spike and then come back down and not really see an impact in housing. It's just a whole conversation about that, of different industries that are out there and which industries dominate your specific area, right? So San Diego being military heavy, technology, medical, right? They have seemed to be the fields that are holding strong right now, which can kind of talk to our market then, what we see.
Mm-hmm. Yeah. Okay, so overall, according to what you're seeing, Devin, what we're also seeing in the market and all the buyers being excited, if rates continue to stay low, people should be taking advantage of this. Yes, we're definitely seeing an uptick on price points for homes, so they're very high. But again, making it, because the rates are so low, it still makes it affordable for buyers, but a win-win for both buyers and sellers. I guess based on the election, we will see what happens, but the economists are predicting even through the elections that the economy will remain strong for the housing market and that the rates will remain low. Good?
Definitely. If I could just piggyback one more point, because I'm sure you guys say it, but it's coming from someone other than a realtor. Maybe it'll be a little bit harder. I don't know. But when I see buyers out there searching for homes, to speak of the strength of the market, I'm seeing homes go for $20,000, $30,000, $40,000, $50,000 over asking. So referencing demand, I know you guys see it, but I just want to say it from a lender's perspective to your buyers, like, understand the demand is real. People want to buy. They are not scared of this market, and values just keep going up. So coming from a different source.
A quick question, just to your point about the home prices just continuing to increase, especially here in San Diego because of the high demand within the buyer pool. For sellers out there that are considering selling, yes, they're probably going to get a really good deal, but can you tell us a little bit more about why they should trust the professional, the real estate professional with that price point, and why that price point is very important when it comes to the buyer being able to actually get their loan approved?
Yeah, so part of what I do is cross qualifications, like for you guys, and you have listings, and for those that may not understand the definition, it's just I basically review offers that are coming in for you guys, for your sellers, and make sure the financing is solid. And a quick example, I saw one property had multiple offers on it, and one person bid, the house was $450 condo. Someone bid $480,000. They wanted a seller credit, like money back for closing. And another one came in and bid $475, same thing, was doing down payment assistance. All sounds great to the seller. Like, I'm gonna get $480,000, I wanted $450. But ultimately the seller took a price at $455 because that person had 20% down. They understood that if it didn't appraise, and that's the whole key to the story here, is if it didn't appraise, they knew that buyer could perform. Because if this one came in at 480 that needed help, 475 that needed help, and the home appraises at 450, they're still going to ask for help at 450. Now that seller's going to get 440, So the sellers were smart, and they realized that just because it was the highest offer didn't mean it was the best offer. So they took it. They still made more than they were expecting, but
yeah,
that's a good point.
Well, and then just for people out there that may not know, just very quickly, the appraisal piece, do you want to?
The appraisal piece is basically there to protect a buyer, saying that, hey, if I'm buying a house for $500,000, in order to get a loan of whatever the amount is, the house has to appraise at $500,000. Now, with that said, in this market, in the competition, you are seeing buyers pretty much waive their appraisal contingency. So it's something that, if and when that time comes, it's a careful conversation that you just want to make sure you are doing the right thing. But again, the appraisal is there to basically protect you and make sure that you can get the loan for that specific property.
So to Devin's point, sellers, be smart about the price point. Trust your realtor, because again, the bank ultimately says yes or no, and your buyer may not end up getting their loan approved. So the highest offer is not always the best. Thank you, Devin, so much for being with us, and we'll catch you next time.
Thanks, Devin.
All right, talk soon.